Let's bring in Tom Forte. He's managing director and senior research analyst at D.A. Davidson. Tom, it's good to see you. You've got a $270 price target. You've had that, I think for a couple of months now on Apple. So what do you make of the new reports about demand? Are we possibly going to see, dare I say, a super cycle here?
Definitely not a super cycle, but I think what we're seeing is that expectations for the current generation of iPhones from Apple are arguably the lowest they've ever been. So against the backdrop of low expectations, the prospect of them ramping production is very good news. And I think that what you're seeing here is the company, as you pointed out, did a much better job pricing the devices versus last year, where they had double-digit price increases on all their units, their different versions of the device. And then maybe to some extent what you're seeing is consumers buying in advance of next year's device, where there potentially may be a 10% price hike thanks to Uncle Sam with tariffs.
Oh, because the tariffs,
low
I thought.
expectations
Sure.
and better results off low expectations.
Well, and also the 5G is sort of yet to be crystallized. So I know people who are super into that might hold off, but for everybody else, Tom, they might be hanging on to an iPhone 6, and they're going to stop supporting that model, right?
So excellent points there, Kelly. So I do think that at this point in time, it isn't 100% clear that next generation 5G network devices will be available next year. And they did discontinue their support for iPhone 6s, which was a popular model. So that, I think, is all contributing to the better than expected performance for the current generation of iPhone devices this year.
Josh, it's interesting here to look at the Nikkei report where they speak to people who say, the fall has been much busier than we expected in terms of making these phones. The company, of course, is pretty conservative in general when it talks about its guidance and its numbers. So should we expect to hear any more updates from suppliers that could help crystallize whether this demand really is lifting off?
Well, it's interesting, yeah, because usually when I'm on air talking about a Nikkei report, it's usually traditionally negative data points, right? They're usually talking about lagging demand. That's honestly why we usually talk about these Nikkei reports. And here we have a positive data point. I would say, Kelly, we have seen other positive surveys, too, from analysts this week. I thought one interesting one I would just highlight was the team at Evercore. They did talk to 5,000 people. That's a pretty good sample size. And 40% say they were interested in buying a new iPhone. Demand, they said, skewing towards the iPhone 11. And the team there saying that was basically in line to actually slightly higher than historical trends. Of course, Apple does report October 30th, so hoping to get more insight at that point, Kelly.
Tom, finally, what's baked into your $270 price target in terms of phone sales? And does this all underscore how important they remain to Apple even as it pivots to being a service company?
Sure. So if you look at their iPhone sales or smartphone sales, it's still about half of their total revenue. I would say, though, that baked into our 270 price target is still some pretty modest expectations, call it some modest sales declines from last year, given that we did reset the bar when they pre-announced disappointing results for the December quarter. The good news is the company's done an excellent job of focusing on what's next for Apple as they pivot away from smartphones on proprietary content, healthcare, and financial services and payments, among other things. So I think what you have is low expectations here, and the stock's still well-positioned in our view.
Okay. Appreciate it, guys. Thanks. Tom Forte
Thank
from
you.
D.A. Davidson and our own Josh Lipton.